right, our next question is from David. My wife and I were discussing our retirement savings and have a question neither of us knew the answer to, but it seemed important. If the brokerage we have our 401k with went bankrupt, do we lose our 401k? How would we recover it?
Well, that is a good question. Fortunately, every broker has what's known as SIPC coverage. So it's basically the FDIC equivalent for brokers. And it covers you up to losses if the company fails or, in some cases, fraud. But there's a limit, protection of $500,000, which includes $250,000 of cash. The good news is that most firms have more coverage. It's called SIPC excess coverage, and it's enormous. So Vanguard Brokerage has coverage of up to $250 million per account. Fidelity has up to $1 billion per account. So you're probably covered.
Who insures these? Is it one company that insures?
I don't know. It sounds to me like the type of Lloyd's of London type of thing.
I mean, if Vanguard goes bankrupt, we have bigger problems than our 401k.
Right. Well, that's a good question. So first of all, it actually doesn't happen that often. I looked at how many cases are now pending with the SIPC, and there's only 4. Legend Securities, Western Capital, Lehman Brothers, and Bernard L. Madoff Investment Securities. So I don't think it happens that often.
Okay.
So maybe it doesn't actually cost that much to insure all this. But regardless, there is coverage. Also, with a 401k, any of the qualified employment plans are covered by the ERISA laws, which are governed by the Department of Labor, so they have a whole other layer of protection. All that said, if something happens, it's a big pain. What happens is the authorities come in, swoop into the brokerage, get all the accounts, and see who owns what. So it's really important for you to have documents, keep your paperwork, because if the brokerage was a complete mess and they don't have enough paperwork to establish what you own, you have to be able to prove it. And there are limits to how long you have to make a claim. So for example, in the case of SIPC, you have to make a claim within a year. So as soon as you know that there's trouble, make your claim, contact the relevant authorities to make sure you get your name on the list.
With something like Bernie Madoff, though, it wasn't like they just went bankrupt. It was fraud. So you may have a piece of paper that says you have $1 bajillion, but in actuality, you had $0. Does insurance still kick in, even in the case of fraud?
With that, there were settlements where people were basically what they did have was split up among the people who made claims. Right. And there was some coverage for it as well from the SIPC and other organizations. It's also important to note that this is in the case of brokerage insolvency, some cases fraud, does not insure you against investments going down or does not insure you against a financial advisor giving you bad advice. You're on your own for that.